Howdy, Jacob here. Today we're going to review a company that I'm sure no one's heard of and has zero people enjoying and liking this company. It's called Tesla. All right, automobile industry, 536 billion market cap, enterprise value a little bit lower. For a car company, half a billion valuation. Very interesting. Again, it's in the automobile industry. It's a car company when over 80% of the revenue comes from selling cars. For them to be incorporated in 2003 and be that big, very impressive. They have debatably the most optimistic CEO ever. I've listened to both his podcasts or both of his attendances on the Joe Rogan podcast. I've listened to some earnings reports. He's an absolute freak. I don't know how he does what he does, but let's review the company. So revenue growth, the revenue growth is amazing, 3.2 billion to 97 billion dollars, but the revenue growth is declining. So they are still growing, but less than they were before, which again, I mean, of course they're going to. They sell 97 billion dollars worth of revenue. Absolutely, they're going to not grow at 40%, 30% CAGR like they have in the past. Gross margin is down quite a bit from what it was 9 years ago. Earnings per share is quite a bit higher due to the fact that they're actually making money. Return on invested capital recently, absolutely amazing. They do a great job historically of reinvesting back in themselves. In the income statement, we show. All right. Income statement shows revenues. Okay, what do I want to look at? Net income growth quite a bit. They've actually had favorable income taxes. So if you actually look at the pre-tax income, not as high as their net income. Shares have grown quite a bit from 9 years ago, but have been relatively flat for the last 2 years. R&D explosive, almost 10 times what it was 10 years ago. 4.3 billion in the rolling 12, with just 465 million in 2014. So they are doing a lot of reinvestment back in themselves. They have about $29 billion cash-like products with 1.9 billion in debt, short-term, 2.7 billion long-term debt. They have so much cash that they could pay off all their interest-bearing debt. No concern, no problem whatsoever. Very healthy on the balance sheet. Cash flow statement shows quite a bit of reinvestment, like we've talked about. Their capital expenditures have almost 10 times, from 970 million in 2014 to 8.9 billion in 2023. They're huge investments. That's the majority of their cash is going towards reinvesting back into themselves. And yeah, free cash flow, 4 billion, 7 billion, quite a bit lower than what their net income is. So keep that in mind. I do prefer cash flow production. I'm a big cash cow guy. If the company is producing a plethora of cash flow in comparison to earnings, and there's nothing wrong with that. Cheap valuation, I prefer that all day. Let's start making some assumptions here. So revenue growth, I think that Elon Musk is, like I said, the most optimistic CEO ever, but you got to look at facts. They are decreasing the price of their cars. So although I think they're going to be able to sell more cars than what they've done historically, they're going to sell more at a cheaper price. And so from that perspective, I think, to me, 12% seems fairly reasonable, maybe a bit high for me, but I think I'm comfortable with it. And the margins, at least recently, on the net income side, have been inflated due to income tax being positive. So I might dampen those down a bit. And we have seen in the rolling 12, it's actually down as well a little bit. So maybe let's do a pretty substantial range. Let's do 12 and 8%. Increase of shares, let's go. Stock-based compensation is $2 billion. That's about, let's say they increase 0.5%. Due to stock-based compensation and then not repurchasing any shares of stock. Again, this 12% includes reinvestment. These margins also include where I think the business is going to be, along with them reinvesting back in themselves. For price earnings, Right now, it's everyone's favorite company, but will it be forever? I don't. I don't know because again, it's a car company. It's the best. It currently has the best, one of the best numbers from a car company. It's no Ferrari or anything from a margin standpoint, but they do have absolutely very impressive margins. And I mean, the good news is that they might not be a car company forever because since obviously majority of their revenue is coming from cars right now, they are absolutely expanding their energy business and I believe their Wi-Fi business, or I don't know if it's called Wi-Fi if it's in the space or whatever. I don't know so much about that business, but I mean, it is growing a lot faster than the cars. So if you think about it from a revenue or pie perspective, the pie is mostly cars now, a little bit of other. The other is growing faster than the cars. So at some point, all else equal, if they were to continue at this rate, there will be a point where the other outreaches the car business, and it'll just be a plethora of businesses that somehow Elon is running all the time because he's absolutely impressive. But to me, right now, just looks a bit expensive. Can you see higher revenue growth? I mean, maybe. I think outside of revenue growth, I feel pretty good about these. People will say 20p is too low. I think at the end of 7 years, people are going to realize that they can't have 15% margins forever, which their free cash flow has not produced nearly that figure. And I think that I do think that we are forcing ourselves into electric vehicles, but there's still a lot of room to go for there. And I'm not saying their path is short. This is just me being a value investor, not so much into hype and everything. And I look at these numbers and I come up with valuations that to me make sense, and to me, it looks expensive. But I'm not gonna definitely not shorten it. It's a fantastic company. Like I said, the most optimistic CEO ever. I would I won't ever short this. I think it's a fantastic business. I don't short great businesses, but try not to short anything actually. But again, fantastic business. Just again, everything is the price you pay for it, and to me, this looks a bit expensive. So have a great day.